Excited to finally have the opportunity to fully dive into what the social arbitrage hedge fund is and why I've been working on this, why I have a YouTube channel, why I made the Ticker Trends alternative data platform, and how they all connect together to make this fund really amazing, but also to make this channel even better and to make the Ticker Trends alternative data platform exponentially better even than it already is. Um, this all connects together, and although I haven't necessarily explained it that way from the beginning, there's been a reason why I made this channel and why the Ticker Trends platform is public in the way that it is. And they actually all connect to this social arbitrage hedge fund in a really cool way. At least I think so. So the social arbitrage hedge fund is now finally fully set up. We are able to now legally accept capital. We have our bank account, our entities, our legal setup, our registration and compliance all done. And this has all been thanks to an amazing company that we've been working with, which is called Repool. Repool is a hedge fund administration platform that was part of Y Combinator and are now fully launched out in the public. They help with hedge fund setup as well as post-launch administration, all in one. We've had an amazing experience with them, and this has allowed us to be a fully US registered and regulated hedge fund that operates out of Dallas, Texas, out of our physical office, which I'll show you in the deck in just a minute here. If you are interested in anything I talk about in this video related to the social arbitrage hedge fund, feel free to check out our website, tickertrends.io/fund or socialarbitragefund.com. They will both lead to the same place. You can find the deck, which I will be going over in this video there, or the email admin@navtrading.co. If you are interested in subscribing capital to the fund, feel free to send us an email, admin@navtrading.co. Even if you have any questions, we can get on a call. I can just respond to you with any answers if you prefer to go over email. But I am very available online in terms of communication. And if you are watching this video, then you are likely more than not a really good candidate for investing in this fund, as education is a huge part of who we look for when accepting investors. We want to build very long-term relationships, and that means someone who understands what we're doing and we understand what they are looking for. I should also mention that we have two requirements for investing in the fund. Those two requirements, legally speaking, are that the investor is an accredited investor under a US definition, as well as a qualified client. Essentially, all these is if you are above a certain net worth requirement, which the requirement, again, I would refer to direct legal documentation online. However, it is around a 2 to 3 million net worth outside of primary residence. If you fall under that requirement, that minimum requirement, then you will be someone who can potentially invest in the social arbitrage fund should we decide to work with you. But with that being said, how does this actually all fit together? Why does this data subscription platform tie into the profitability of a hedge fund? Well, if you've been following my channel, you understand this basic idea and concept of social arbitrage trading. Social arbitrage trading is getting all of this different digital data from different platforms and relating that data to financial markets in order to derive an edge over other players. By being able to say, well, we know this specific product is trending on this platform. We know that people are talking about this specific sector in this way. There are all these different ways that we can use this digital data to relate to the success of different public companies or publicly traded assets. In fact, it doesn't even need to be companies. Some of the most profitable trades that we've done have been even outside of that in things like commodities or economic thesis trades that we've had. So this data is broadly applicable, but the core idea of this is how can we connect this data to equities, and why is that so profitable? And we've been able to prove that over time. So with this core idea of social arbitrage, using the social data to trade stocks and get ahead of the rest of the market, we've also developed this platform, which is the Ticker Trends Alternative Data Platform. The Ticker Trends Alternative Data Platform is a terminal where users can search tickers, terms, websites, different social media metrics, financial metrics, sentiment metrics, and analyze this data relating to public companies. So we've essentially made public a certain extent of our research platform through a subscription. And the reason why we've done this, number one, is to give us the ability to build out our infrastructure further, because through this revenue that we generate through the subscription platform, this goes directly back reinvested into actually sustaining and developing the platform further. But it also gives us a secondary advantage, which is actually building on our competitive edge. So we have this social arbitrage edge, and now we have another edge, which is our own internal data platform, of which the data we are only able to access. So we have data from our own platform of what people are looking at in the context of financial players, so traders and investors on our platform, in addition to the larger institutional players and researchers that utilize our platform. And we can see what they're searching in terms of tickers, terms, trends, and we can create our own internal data set based on the usage data of the Ticker Trends platform. And this kind of builds on the future strategy of the Ticker Trends platform, transitioning from something that is a subscription product to post-launch of the hedge fund, more of an open platform that is more of a public good for people to be able to analyze this data wherever and whenever they want, without having to pay a subscription fee that has too high of a barrier of entry. And this allows us to build a really, really strong curated data set, even beyond what we already have with our existing user base. So the Ticker Trends platform will actually get better through this hedge fund, because we will have more resources from the hedge fund to invest into building out the platform. Plus, we will have the additional incentive of using more platform data in our actual strategy, meaning that we can lower the price and make it more accessible to more investors and institutions. So that's how the Ticker Trends platform plays into the social arbitrage fund and builds on our edge. So you might be saying, well, this is really cool, Adrian, but there are competitors in this space. What differentiates the social arbitrage fund from how other funds use data, and from things, for example, like credit card transaction data, which I just recently made a video on? Credit card transaction data is the idea of purchasing data from credit card companies and using that data to analyze what consumers are actually purchasing. So this is called point of purchase data. It is, for example, getting a receipt, or seeing a bank transfer, or seeing that credit card tap. Those are all point of purchase data points. And these are available through platforms such as Bloomberg Second Measure. Bloomberg Second Measure is owned by the Bloomberg company, the same company as the Bloomberg terminal. And Second Measure, they just essentially sell this credit card data related to financial markets and public company tickers. So I was recently talking to a friend, and he asked me, well, if this credit card transaction data exists, why should you care about this alternative social data that you're tracking? Why does social arbitrage matter in a scenario where I can just get point of purchase data directly? And what I explained to him is that, I'll read off this slide quickly. It is said that consumer point of purchase data, such as credit card transactions, are the pinnacle of alternative data sources. However, they're just one piece of the puzzle. While tracking purchase volume can indeed hint at the forthcoming earnings, it is often a trailing indicator. By surveying social, consumer, and corporate data, we can anticipate market trends even before they manifest at the point of purchase. Before a consumer makes a purchase, they typically discover, research, and express their intent. It's this preliminary journey that we monitor, offering a more timely and holistic view of market movements. So, adding to what I was saying earlier of analyzing Ticker Trends platform usage data, By analyzing data that is ahead of point of purchase data, this gives us the additional, a further ability to anticipate how other competitors, market players, and investors are going to react in the market. So let's say that the very base idea of social arbitrage is to anticipate earnings. So let's say that you can use this alternative data to get a more accurate idea of how an earnings release is going to play out. Well, even beyond that, let's say that, well, we do use this alternative data to anticipate those earnings, but we can also use this alternative data to anticipate how other hedge funds are going to look at their own data that they're tracking internally. So if these large hedge funds, well, actually, these large hedge funds do use this point of purchase data, we can look at this data that looks at consumer discovery when people actually hear about that product or that service or that sector that they are later going to decide to spend money on, when they research it. So they think, do they actually want to purchase it? And then finally, they make that decision. This is the entire point that we're tracking at the Social Arbitrage Fund, is this preliminary discovery and ideation of even realizing that this consumer, this economic entity, needs to make that purchase. And then when the other funds get this data and decide to make their trades or whatever it may be, they're already lagging behind our indicators, our alpha, our insights into these companies. So this is why this data is so powerful, even in a world where data such as point of purchase, credit card transaction data exists for purchase available to the public. This is how our Edge is able to preemptively identify even what other funds are going to be doing with their investments. So our core thesis of the Social Arbitrage Fund is rooted in the belief that a multifaceted approach to data yields the most robust insights in financial markets. While the industry often gravitates towards conventional data sources such as point of purchase metrics, we recognize the inherent limitations of such a focus. Instead, through social arbitrage, we integrate a vast array of alternative data encompassing consumer behavior, social dynamics, economic patterns, and corporate intelligence. This comprehensive approach allows us to preemptively identify market trends and anticipate the moves of other participants. Our proprietary Ticker Trends platform further amplifies our edge. Beyond its advanced infrastructure, the platform offers an exclusive window into the research behavior of market players, enabling us to refine our strategy with unparalleled precision. This synergy of broad data sourcing and real-time research insights positions our fund uniquely, ensuring that we not only stay ahead of market movements, but also lead with informed insight. So this is the culmination of how this all ties together into the Social Arbitrage Fund product as it is today. I will leave some of these slides for you to look at if you're interested through the deck that's linked on the website. This is a risk management side, the fund overview, some of the return information, which I'll quickly go over. Since this strategy has been actively traded, and I should mention that this strategy has and will evolve over time as we're able to build it out more fully. So even in our historical returns, I believe that with this additional funding and resources that we will receive through the Social Arbitrage Hedge Fund, it's only going to exponentially improve our strategy and allow us to turn this more and more over time into a purely quantitative strategy. Currently, it is a hybrid strategy using partial quantitative methods such as for hedging out market risk, which we do not want to have in our fund, that's unrelated to our market edge, while also using partial quantitative methods for actual research and discovery of the companies, since we do track such a large amount of data. Over time, we will be incorporating more purely quantitative strategies into the fund to diversify the sources of returns which we are getting. However, of course, just the hybrid discretionary quantitative method has proven to be exceedingly profitable and successful thus far. So during this active trading period, we've been trading for 32 months with a total return over that period of 239% and a compound annual growth rate of 58% with a Sharpe ratio of 3.3, which is considered to be exceedingly good. I should mention that compound annual growth rate is taking into account the compounding effect of the capital over time, which is why you see that difference in 239% and the compound annual growth rate of 58%. Again, I do strongly believe one of the primary reasons why we are launching this fund is because even though we've had these exceptional returns, which is obviously a massive point that's allowed me to prove the success of this strategy, I do also believe that these resources, with the ideas that we have internally, we've already built out this amazing infrastructure and this amazing strategy, but there are so many additional ways that our amazing team and the ideas that we've been able to get through our Ticker Trends platform. There's so many ways that we know we can improve this strategy through additional data sets, more infrastructure, and more research. And this will only improve our already exceptional returns. So that's why I want to express the excitement and the potential that this hedge fund has over time. And that's why I'm so confident in the success of this fund, but also in the synergy that we will have with our investor base and why we will be building those long-term relationships over time, because I think that our investors will become just as excited as we are as they work with us in the fund. After this, we go into some research examples on the deck and the basic fee structure of the fund. The fund will be launching at a fairly small size with a relatively low minimum investment for other hedge funds. This is purely to allow investors to gain comfort in the fund. And we do have a very standard fee structure of 2% management fee and 20% performance fee with a high watermark clause, meaning that we will not charge fees unless our current portfolio value is above the all-time high portfolio value. So that just means that if the portfolio were to go down after charging fees, we will not charge fees again until it's above the all-time high amount that your balance was at. This is just a very good practice thing that's pretty standard in the hedge fund industry. If you're interested in learning more about our team, we have about 8 people on the team right now, 2 partners, and then 6 core team members, including myself. Vinit is the chief risk officer of the fund. He has actually been managing his own fund for about a year now. He has more traditional finance experience, where I come in from the quantitative end, having more experience with infrastructure, technology, and strategy. And he has much more experience in the hedging side of things. So he has developed the quantitative hedging side to allow us to take lower risk and really focus on the edge and alpha that our strategy creates for us. We do also have a physical office location, which I'm more than happy to have physical in-person meetings at if you are based out of Dallas, Texas, which is where the fund is based out of. If you would like to subscribe capital to the fund, feel free to schedule a meeting with us at admin@navtrading.co. I'm also extremely available online in terms of answering questions or preliminary feelers. If you have any questions, I can always email you directly, or we can get on a quick call if you don't want to commit to a longer call. Again, investor comfort and education is the main thing that I want to focus on. And that means being available and answering any questions that someone may have. So even if you're on the edge of just wanting to ask a question to have something clarified for you that you're just not quite sure of, I'm there to answer that for you. And ultimately, the more that you understand this hedge fund, this strategy, and this structure from the very beginning, the more success that we will be able to have together in the long term as we build our relationship. Of course, as I mentioned at the beginning of the video, the 2 requirements for the fund are investor accreditation and the qualified client status, which on the deck, these are actually links which link directly to government websites where you can read more about those requirements to ensure that you qualify for them. And we are able to accept investors from all states in the US, in addition to investors outside of the US, which the process is actually not much more complicated for. In fact, in some ways it's simpler. So again, feel free to reach out to us. I'm really, really excited for the future of this fund. I've put a lot of time and effort into this, and I think it's shown to be successful through our historical returns, through what we've been able to build with our social media followings, our research, and community. And this is something that I know my team and myself and even people outside of this company are really passionate about. So that's why I think this social arbitrage hedge fund is going to be something really unique in the market, that will only compound and build over time into something exceedingly exciting, that I can't wait to be a part of. Anyways, thank you all so much for watching this presentation, and I hope to meet you all very soon.